According to the latest data, the average condo price in Toronto hit $628,000 in December 2025, down 7.9% year over year. At the same time, new condo sales in the Greater Toronto-Hamilton area dropped to just 533 units in Q1 2025, the lowest quarterly total since 1995. Sales hit a 30-year low, prices are sliding, and unsold inventory equals 78 months of supply. That's almost 7 years' worth of condos sitting empty. But here's the thing, condos are still selling. So if the market collapsed, who's actually signing deals right now? Let's break down the data and see exactly who stepped in when everyone else walked away. For over a decade, investors were the engine of Toronto's condo market. They dominated pre-construction sales, flipped assignments, and built rental portfolios. But in 2025, that engine died. Here are the numbers. Industry data shows the share of homes being bought by investors is on the decline. In Q4 2024, rents for the average one-bedroom apartment in the GTA fell by 5% year-on-year. Rental yields collapsed. Investors who bought a condo expecting $2,800 a month in rent were getting $2,400, while their mortgage payments sat north of $3,200. The math stopped working. In Q1 2025, only 215 new condo sales were recorded in the city of Toronto, the lowest level since 1990. Compare that to 2021, when quarterly sales hit thousands. The drop was brutal. New condo sales in the Greater Toronto area plummeted to 4,800 units in 2024, down from 29,626 in 2021. That's an 84% collapse in 3 years. Assignment listings flooded the market. Investors who bought pre-construction units in 2021 and 2022 couldn't close. They couldn't qualify for financing under the stress test, and condo values had dropped below what they paid. Many of these units were purchased years ago when borrowing costs were substantially lower and market expectations were more optimistic. By late 2024, developers reported 15% to 20% of buyers walking away from deposits rather than completing purchases. A 2023 industry report found that, on average, condo investors who closed on their newly completed units experienced negative cash flow to the tune of $597 per month. Investors were bleeding money every single month just to hold the property. The numbers didn't lie. Investors backed off. Right now, the market looks completely different. Investors aren't buying anymore. They're trying to exit, and that left a massive hole in demand. So who filled the gap? End users. People who actually plan to live in the condo. Investor demand took a back seat to other types of buyers, particularly first-time home buyers who typically tend to buy condos as their first purchase in the GTA. The data shows first-time buyers and people looking to actually live in the units made up the majority of purchases in late 2025. Here's what changed. The average condo price in Toronto hit $628,000 in December 2025, down 7.9% from the previous year. For Q3 2025, the average selling price dropped by 6.4% year over year to $649,168 compared to $693,452 a year earlier. That 9% to 10% drop from peak prices got attention. First-time buyers who were priced out in 2022 when condos averaged $700,000 plus started coming back. But they weren't rushing. The average property's days on market increased to 65 days in December 2025, up from 56 days in December 2024. Buyers knew sellers were desperate. The average sales price to listing price ratio was 97%, meaning homes sold for 3% less than their asking price on average. Realtors reported a shift in negotiating power. Buyers were making lowball offers and walking if they didn't get them. Open houses that used to pack 30 people were seeing 5. Bidding wars disappeared. Sellers started offering incentives, covering closing costs, throwing in parking spots, paying condo fees for 6 months just to get deals closed. Between January and March 2025, 3,794 condominium apartments changed hands across the region, a 21.7% drop from the same period last year. Sales were down, But the buyers who did show up were end users. They wanted move-in ready units, good locations, low maintenance fees. Anything older or facing special assessments. Sitting for months. As of January 2026, first-time buyers and people actually living in the units dominate the market. This shift changed everything overnight. Now here's where it gets interesting. While the overall condo market struggled, luxury condos stayed strong. According to recent reports, high-net-worth buyers are continuing to invest in high-end units, particularly in boutique buildings and premium locations. The luxury segment operated in a completely different market. Affluent buyers are less impacted by rising interest rates, often purchasing with significant cash reserves or lower loan-to-value ratios. Downsizers, baby boomers selling suburban homes, were a major part of this group. A house in Mississauga selling for $1.3 million could buy a luxury condo for $900,000 and leave $400,000 for retirement. But by late 2025, this group slowed down. Baby boomers and empty nesters were less active in buying condos, as many failed to sell their large homes and had to pull them from the market. Still, luxury condo sales held up better than the overall market. These buyers wanted newer buildings, full amenities, concierge service, parking, storage. They concentrated in King West, the Distillery District, Yorkville. Anything outside the core? They weren't interested. One agent sold a penthouse in the entertainment district for $1.275 million after listing at $1.375 million. Another penthouse near St. Lawrence Market went for $1.05 million. Luxury condo buyers often purchase with significant cash reserves. They closed fast, didn't haggle much, and kept the high-end market stable while entry-level condos struggled. Right now, this group represents a limited but steady pool of buyers in Toronto's condo market. Here's a trend that exploded in 2025: assignment buyers hunting for deals. Listings for assignments in prime downtown Toronto locations show asking prices ranging from approximately $520,000 for one-bedroom units to $899,990 for two-bedroom units. These are pre-construction units where the original buyer is trying to sell their purchase contract before the building completes. Why did this market blow up? Original buyers purchased at peak prices in 2021 and 2022. By 2025, those units were worth less than what they paid. Based on prices of recently occupied new condominiums and similar units in the resale market, condominium investors in Toronto potentially face up to 6% in capital losses on pre-construction purchases concluded in 2024. Many couldn't close because they couldn't get financing. It is more difficult for investors to access financing when the value of their condominium units decreases between the pre-construction purchase and closing. So they listed their contracts for sale, sometimes at a loss, just to avoid the full hit. According to July 2025 market data, condo apartment prices are down 9.4% year over year, with the average unit now at $651,000. Assignment buyers stepped in, looking for discounted entry points. They're buying units that will complete in 2025 and 2026 at prices below what the original buyer paid. But this market requires careful moves. Builder approval is needed, there are administrative fees, and financing is harder to get. Not all lenders will finance assignments. Still, for buyers with cash or strong credit, assignments offered some of the best deals in the Toronto market in 2025. Right now, the assignment market shows just how desperate some original buyers are to exit. Let's talk about who's not buying, because that tells us just as much. Recent investigations highlight how years of investor-driven development led to the construction of too many compact, inefficient units, many under 500 square feet. These shoebox condos, some as small as 300 to 400 square feet, were built for investors banking on short-term rental income or quick flips. But in 2025, nobody wanted them. These units are now struggling to attract end-user buyers who prefer larger, more livable spaces. People working from home needed space for a desk. They wanted balconies. They wanted layouts that actually work for living, not just sleeping. In November 2025, A survey showed that 35% of Canadians say condos are no longer a good investment. That sentiment hit micro-condos hardest. Rental income wasn't covering costs. Many Toronto condos have become a toxic asset, with investors no longer able to count on the same demand from renters, and many owners bleeding cash because rental income has fallen while mortgage rates rose. Just 165 new condos were sold across the entire Greater Toronto Area in November 2025, lower than the 10-year average by an eye-watering 92%. Micro units made up a huge chunk of that unsold inventory. Buildings full of 400 square foot units sat on the market for months with zero interest. The market flipped overnight. What was once the hottest product became the toughest sell. So who's actually buying Toronto condos right now? The data makes it clear. It's not investors, they collapsed. It's first-time buyers and end users who finally see affordability after years of being priced out. It's assignment buyers hunting for discounted pre-construction deals. It's a small group of high-net-worth luxury buyers who can pay cash and aren't worried about rates. For year 2025, sales fell by 11.2% from already low levels to 62,433, the lowest since the year 2000. Unsold inventory totaled 23,918 units, equal to 78 months of supply. Prices dropped between 6% and 10%, depending on location. Days on market hit 65 days. The market shifted to buyers faster than anyone expected. But here's the question: how long does this last? Economists forecast condo prices falling through 2025, dropping between 15% to 20% from their 2023 peak. If rates drop further in 2026, will investors flood back in? Or is this the new normal? A market driven by people who actually want to live in the condos they buy? And that's why homeowners, investors, and renters are all on edge right now. The Toronto condo market just rewrote the rules, and the data shows no one knows what comes next.